In 2011, this company's stock was worth about $7. Most investors thought it was boring. It made memory chips, the kind of commodity product Wall Street loved to ignore. Then, on a single day in May 2026, it jumped 19% and crossed $1 trillion. This is the story of Micron, how it got here, and whether this is a bubble about to burst. Let us start with the event itself. On May 26, 2026, Micron stock surged about 19%. It was the company's biggest single-day gain since 2011, and its 28th record high of the year. That one session added roughly $160 billion in market value. It pushed Micron past Walmart into the 11th largest public company in America. The trigger? A single analyst note from UBS that stunned the market. UBS tripled its price target from $535 all the way to $1,625. It was the single highest price target on all of Wall Street, and the stock obeyed. But to understand why, we need to rewind, because Micron used to be a very different story. Micron is an American chipmaker headquartered in Boise, Idaho, founded back in 1978. It makes memory, the chips that store data, not the processors that crunch it. Two main products: DRAM, your computer's short-term working memory, and NAND, long-term storage. DRAM is the heart of the business, roughly 80% of Micron's revenue. And here's the key: only 3 companies on Earth make this memory at serious scale: Samsung and SK Hynix of South Korea, and Micron, the lone American player. It is an oligopoly, but historically, Micron was the smallest of the 3, the follower, and for decades, this entire industry had a reputation for being brutal to investors because memory chips behave less like tech and more like oil or steel or wheat, a commodity, and commodities live and die by one thing: the cycle. For 30 years, the memory industry followed the same painful pattern again and again. Step 1: demand booms, prices rise, everyone makes money, optimism takes over. Step 2: makers race to build new factories to grab market share. Step 3: all that new supply floods the market at exactly the wrong time. Prices crash, profits evaporate. The same companies that were heroes now bleed red. Across past cycles, revenues fell 25 to 40%, and the stock often halved. Micron's last bust was 2023, when post-pandemic PC demand collapsed. So investors learned one rule: never, ever believe this time is different in memory. Which makes what's happening now so remarkable and so controversial, because a brand new force arrived that may have broken the cycle entirely: artificial intelligence. Modern AI runs on massive clusters of chips, mostly graphics processors, GPUs. But a GPU is only as fast as the data you can feed it, and that's the bottleneck. Enter HBM, high bandwidth memory, special chips that sit right beside the GPU. Instead of lying flat, HBM stacks memory layers vertically, like a microscopic skyscraper. That delivers data fast enough to actually keep a hungry AI model fed. And here's why it is so valuable. AI servers are starving for memory. An AI server can need up to 8 times the memory of a standard server, and HBM sells at a huge premium, often 5 to 10 times the price of normal memory. There's also a hidden twist that keeps the whole market tight. Making HBM is so complex that every bit of it consumes about 3 bits of normal DRAM capacity. So the AI boom does not just raise demand, it quietly shrinks the supply of everything else. The result is a memory shortage unlike anything in 30 years. And the buyers? The most powerful companies on the planet, the hyperscalers, Microsoft, Google, Amazon, Meta, all racing to build AI data centers as fast as possible. They are not haggling over price anymore. They just want supply, locked in, guaranteed. This set off a 3-way arms race between the only companies that can make HBM. Right now, South Korea's SK Hynix leads the pack by a wide margin. Recent estimates put SK Hynix around 60% of the HBM market. Micron sits second, near 21%, having recently overtaken Samsung. Here's the fascinating part. Micron actually holds more HBM patents than SK Hynix, 621 filings versus 315, yet it is still the manufacturing challenger, because in memory, winning is not about ideas, it is about who can mass produce reliably first. And the next battlefield is already here, HBM4, the new generation. HBM4 doubles the data interface and pushes bandwidth toward 2 terabytes per second. But there's a warning sign for Micron. On HBM4 for NVIDIA, it may be falling behind. Reports suggest SK Hynix grabbed the lion's share of NVIDIA's next-gen HBM4 orders. Micron's answer? Go all in on AI. It is even exiting the consumer memory business. A bold bet that the future is data centers, not laptops. We will come back to that risk. Now, is any of this actually showing up in the numbers? Because that is what separates a story from a bubble. Let us look at Micron's most recent quarter. The figures are, frankly, staggering. Revenue hit $23.86 billion in a single quarter. That is up 196% from a year earlier, nearly triple, and up 75% from just the previous quarter, the biggest jump in company history. Profit followed. GAAP net income reached $13.79 billion, but the most telling number is margins, the profit on every dollar of sales. Gross margin on the cloud memory unit hit 74%, up from 55% a year ago. In a commodity business, that kind of margin is almost unheard of. Cash generation exploded too. Operating cash flow tripled to nearly $12 billion, strong enough that the board raised the dividend by 30%. The balance sheet is solid, net cash positive, return on equity near 40%. Then came the guidance, and this is what really lit the fire. For next quarter, Micron guided revenue to around $33.5 billion, with gross margins near 81%, and that single quarter would beat entire past years. Underpinning it all, Micron's entire 2026 HBM supply is already sold out and under contract, and the HBM market itself is forecast to triple from $35 billion to $100 billion by 2028. To meet this demand, Micron is making one of the largest bets in American industrial history. A planned $200 billion investment in U.S. manufacturing and research. New factories in Idaho, a massive multi-fab complex in New York, and an expansion in Virginia. The New York project alone could reach $100 billion over 20 years. It is backed by the CHIPS Act, over $6 billion in federal funding. The goal, bring leading-edge memory and national security back onto American soil. It is projected to create around 90,000 jobs across the country. But here's the catch the bulls do not love to mention. Fabs take years and cost tens of billions. Most of this capacity arrives in 2027 and beyond. If AI demand cools before then, Micron could be left with giant factories and not enough buyers. So the business is real, but that leaves the question every investor actually cares about. After a move this big, is the stock now too expensive? And here's where it gets genuinely confusing, because it depends which number you trust. Look backwards and it looks pricey. The trailing price-to-earnings ratio is around 45. That is more than double Micron's 10-year average of about 20. But look forward, and it suddenly looks almost cheap. Because earnings are exploding, the forward PE drops to roughly 10, or even lower. Its PEG ratio, price versus growth, sits near 0.07. That is extraordinarily low. In other words, the multiple actually shrank because profits grew faster than the price. That is not how classic bubbles usually behave. Hold that thought. But the analysts, they cannot agree at all. UBS sees $1,625, yet the average price target sits far lower, around $700, which means the average analyst thinks the stock could actually fall from here. When the smart money disagrees this violently, price is running on narrative as much as math, which brings us to the big one. Is this whole AI memory boom a bubble? Let us do this honestly, both sides, because nobody truly knows until hindsight. First, the bear case, the case that this ends in tears. Argument 1. Memory has always been cyclical. Every single boom in 30 years eventually busted. Argument 2. The speed. Micron went from 700 billion to a trillion in mere weeks. Argument 3. The entire thesis depends on AI spending staying enormous forever, and that spending is historic. The Big Four plan around 650 billion in AI capex this year. Some compare it to the dot-com era, and one name keeps coming up: Cisco. In 2000, Cisco was the picks and shovels king of the internet. Then it crashed 85%. It took Cisco roughly 25 years just to reclaim its old high. That is the warning. Now, the bull case. The case that this time really is different. Argument 1. Profits. At the dot-com peak, Cisco traded near 200 times earnings. Today's AI leaders are wildly profitable, and Micron's forward multiple is in single digits. Argument 2. That sold-out order book and multi-year contracts with the biggest buyers on Earth. Those long-term agreements create a demand floor past cycles never had. Argument 3. Even if prices fall, cheaper memory makes AI cheaper, which creates more demand. So the bulls say, this is not a bubble. It is a structural re-rating of the whole memory industry. The honest truth? Both sides have real evidence, and the market is voting in real time. My take? This is not a bubble. We are in the earliest innings of AI adoption. As the technology matures and billions of people start using these tools daily, the demand for hardware, especially memory, does not shrink. It compounds. Micron is not riding a hype cycle. It is building the infrastructure for the next decade of computing. That said, the stock can still pull back on any given quarter, but the structural story, that is just getting started. This is not financial advice. Always do your own research. If you are tracking this story, here are the specific risks that actually matter. 1. Cyclicality. The single most reliable pattern in memory is that good times end. 2. CapEx intensity. Those 200 billion in fabs become a burden if demand stalls. 3. Customer concentration. A handful of hyperscalers drive most of the demand. 4. The HBM4 race. If Micron keeps losing NVIDIA allocation, the growth story dents. 5. Geopolitics. Export controls and US-China tensions hang over the entire chip sector. None of these are reasons to panic. They are reasons to stay clear-eyed. So what should you actually watch from here? The next earnings report lands June 24th, a major near-term catalyst. Watch the HBM4 ramp and whether Micron claws back share in NVIDIA's next platform. And watch hyperscaler capex. If those AI budgets ever flinch, memory feels it first. That is the early warning system for whether the boom keeps running or rolls over. Micron sits at the absolute center of the AI build-out. That is not hype, that is structural. Now I want yours. Structural re-rating or bubble waiting to pop? Tell me in the comments, and if this helped, subscribe for the next breakdown. See you